This episode of the Young Turks is brought to you by Click It or Ticket. As Cenk would say, da-da-da.
We now have new information about the Federal Reserve and who they gave our money to, and it continues, of course, to be disastrous. We now find out that they gave $30 billion each to Goldman Sachs, Credit Suisse, and Royal Bank of Scotland at the grand interest rate of 0.01%. That means they basically gave them free money. Now, you might think, hey, wait a minute, that's the Federal Reserve of the United States of America. I wonder if the Royal Bank of Scotland is an American bank. Well, if you were wondering that, you're right, it's not an American bank. Neither is Credit Suisse. In fact, we have given to a great number of foreign banks now that we find out what the Fed was actually up to, including, here's my favorite, by the way. You know, of course, there's Deutsche Bank and there's all the European banks, etc. But we also gave to the Arab Banking Corporation. Well, that must be nice. We gave $28 billion in loans to them. And guess who their majority owner is? That's right, Libya's central bank. In other words, Gaddafi's bank. Now, that was back in 2008. But get a load of our Federal Reserve. They're like, who needs money? Anybody, anybody, anybody? Arab Banking Corporation, Credit Suisse, come and get it here at almost 0% interest rate. Now, do you remember them asking Congress if they could distribute our money to other banks? Our banks, let alone foreign banks. Oh no, that's right, they didn't, because they're totally unaccountable. It is an absolute outrage. Look, did we know they were doing this before? Yes, we did, right? Did we know at the time? No. They didn't tell us. Now, why didn't they tell us? They said, oh, well, it would endanger the banks that we're giving the money to. People might think that they're not solvent and there might be a run on those banks. The reason people might think they were not solvent is because they were not solvent. That's why you needed to give them $30 billion each. And by the way, that's just the tip of the iceberg. Overall, they gave $3.2 trillion in loans. These new ones, we just at least identified the banks and identified the interest rate, which was 0.01%. Do you have any idea how outrageous that is? I mean, if you went to the Federal Reserve and you're like, hey, dude, I'm broke, man. Just like Goldman Sachs, I'm broke. Can you give me $30 billion at 0.01%? Well, if they agreed to that deal, do you know how fabulously rich you would be? Not because you would get to keep the $30 billion. It's a loan. You'd have to return it, right? But you could then, for example, turn around and buy treasury bonds with it at whatever the rate might be, ranging from 3 to 4%, and you get to keep the 3%. And ironically, you'd be lending it back to the United States government. You would be fabulously wealthy. And that's exactly what happened to all these banks, U.S. and foreign ones, because we just gave our money away. Just gave it away. Oh, well, there was an economic crisis. Well, who caused it? Well, those banks. So why do we help those banks that caused the economic crisis? Okay, fine, we had to. That's what they all say. It was a panic. We had to give away all of our money. All right, what do we get in return? Did we get significant value? I mean, charging 0.01% interest rate, that is not getting something in return. That's getting literally almost nothing in return. Did we get a piece of Goldman Sachs or Credit Suisse or the Arab Banking Corporation? Because, you know, look, if you go to a private person and you say, or an entity of any sort, and you say, hey, I'd like to borrow $30 billion, they're going to take a lot of hide for that $30 billion, let alone the $3 trillion overall. They'd own you. Did we do that? No. We gave it to them for almost nothing. Now, on top of this, and by the way, how do we find out this information? Two ways. One, Congressman Ron Paul and Congressman Alan Grayson, to their eternal credit, fought really hard. So did Senator Bernie Sanders. And they eventually got part of the reform bill, which is, you know, one of the few parts of the bill that I like and I think was worthwhile, was to audit the Fed. So they passed that in the Dodd-Frank bill, and now we are seeing some of that audit. Plus, news organizations like Bloomberg did a Freedom of Information Act, and they wanted to get the information from this somewhat government organization, right? And so through both of those avenues, we've now found out. Now, the entire time, the Fed fought this, tooth and nail. They fought the reform bill, and they fought the Freedom of Information Act in court. They went to court to stop it. Now, on top of all that, the head of the Fed, Ben Bernanke, now says, quote, I personally have always been a big believer in providing as much information as you can to help the public understand what you're doing, to help the markets understand what you're doing, and to be accountable to the public for what you're doing. What an unbelievable joke. Well, then why did you fight it for the last 3 years? and only give it under the threat of law. They say, all right, fine, okay, I gave away all your money for free, and all those guys got rich off of it. Unbelievable crimes, man. And I told you, this is the back door. They figured it out. They're like, Treasury, oh, we'll never make that mistake again. Go ask Congress for money through TARP? Man, that was a disaster. People got held accountable for that. No. Now we got a piggy bank at the Fed. We just print the money. And we loan it to you at nearly 0%. And then you make a gigantic return, all my banker friends. And then you bring the money back after you've made all your money. That's a great little racket they're running with our money. From 1975 to 2008, over 255,000 lives have been saved by seatbelts. Takes very little effort, keeps you much safer. Buckle up.